Hey YouTube, welcome back to the channel. Is history going to repeat itself? That's the question today. JP Morgan reportedly holds 675 troy ounces of silver, and as demand for silver across the globe continues to increase, placing a little more pressure on that global supply chain, is a true silver squeeze laying ahead for us in the future. Now, folks, if you're a regular here on the channel, then you know I'm not a fearmonger. I'm not really a silver pumper, but what I am is a silver stacker as well as an investor. And as an investor, I'm always reading, I'm catching up on what's going on in the market. And I stumbled across this article on investing.com that kind of delves into the possibility of a JP Morgan led silver squeeze and touches on the Basel III changes. That and a whole lot of bling to keep your eyes entertained. So stay tuned, let's get to it. All right, and welcome back. Now, for those of you old enough to remember, Silver Thursday occurred on March 27th, 1980, when three famous brothers attempted to corner the silver market. In just over a calendar year, these guys were able to pump the price of silver up to 713%, or just under $50 an ounce. It was claimed at the time that the Hunt brothers had 1/3 of the world's silver in their possession, although a lot of that silver was held under futures contracts. And of course, not all of that was in physical silver, the kind that you hold. Their aim was to realize enormous profits by holding and disrupting the supply across the globe. It was inevitable, of course, that this would be halted at some point, and this is where silver rule number 7 was introduced by the COMEX, which took exception to their monopoly. Now, this rule targeted the brothers' huge leverage they had used to accumulate their stockpile, and when they couldn't meet their financial obligations, of course, the price of silver fell hard. In 1988, after a large amount of their family fortune was wiped out by paying for their margin calls and their bailout package, they were fined an additional $134 million for conspiracy to corner the market in silver, and eventually the Hunt brothers were left with no alternative than to file for bankruptcy. So let's fast forward to today, and we don't have a coincidence brewing in the background. It is common knowledge that the big banks, chiefly JP Morgan, have had an influence on silver prices for many years. They have been short paper while going long on physical silver, and the simple reason is they have been accumulating silver cheap, knowing full well it is considerably undervalued and has a huge upside price potential. So JP Morgan, the world's biggest stacker. JP Morgan has accumulated a reported 675 million troy ounces of physical silver in recent years. To put that in perspective, that is 21,000 tons of silver. Other reports have suggested that the majority of their paper shorts were dumped back when the price of silver did hit a low of just below $12 per ounce in March of 2020. If this is the case, then JP Morgan now holds over 130 million ounces more than the Hunt brothers did back in 1980 when they attempted to corner the silver market. And that's quite a substantial amount of silver there. There is also a lot more available silver in the world back in the 1980s than there is today. When the price today does go higher, no one will be better positioned on earth than to make a huge profit than JP Morgan. Now, the author states here that he's written many articles on Basel III since early 2021 and the likely effects of central banks stacking physical gold. Well, the argument here has always been that it is in the interest of the central banks and people in general, the world for that matter, for prices to go higher. With banks holding physical gold on their balance sheets and the price going higher, that'll create a healthier bank balance sheet. This may signify the end of the dollar. There's a strong possibility that it could. Now, the global debt problem is a far bigger boil to lance, and a revaluation event of some sort is the only way this debt is actually going to be paid off. JP Morgan has been using the same concept with silver, except they've been doing it on their own balance sheet for a long time now. The recent sell-off in mid-June saw silver go from above $27 an ounce to around $25.50 an ounce in just 2 trading days. And the question is, who in their right mind would sell physical for sub $26 an ounce? And I can tell you the answer is no one. At least that's what the author says as well. Now, is the dumping of paper contracts still taking place during paper smashing sessions? It would certainly appear that way when the smokescreen of a news article known as the Fed deliberation or non-farm payroll does provide the perfect cover for that. So there's some thinking here in this article that the paper contract smashing is still going on. Once demand outweighs supply and these figures are brimming, now before a likely disclosure before the end of 2021, that's when the real short squeeze will come. Open interest levels towards the end of July delivery month got interesting. There isn't necessarily a silver shortage above ground currently, but there is a serious reluctance for anyone to allow it onto the market at these levels. With the stack of silver JP Morgan has, they have the potential to control the market's upside in relatively the same way that the Hunt brothers did, although, of course, on a much larger scale today. With the propensity for the LBMA bullion banks to collapse towards the end of this year, surging higher as the days elapse, given they cannot operate their unallocated proceedings anymore in line with the new Basel III regulations, it will leave a huge gap in the market for an exchange for allocated silver. It is highly likely that the Shanghai exchange, with its vast swaths of physical gold, will have a strong hold on the yellow metal market. But let's talk about silver. What about silver? Is JP Morgan lining itself up to replace the LBMA, but instead as a physical exchange? It would make perfect sense. Whereas the COMEX and LBMA have suppressed the market for years with paper games, this event would be the exact opposite. With their huge levels of stock, they could hold the market much like the Hunt brothers' attempt back in 1980. And as for silver rule number 7, as mentioned in the first paragraph of the article, well, it is very similar to Basel III, as the clamp down on leverage on balance sheets and as a drive towards physical assets ensues. History doesn't repeat itself here, but it does often rhyme. With the unallocated game soon coming to an end, owning physical and eliminating counterparty risk seems like the logical option. We talk about that here on the channel for everyday working people, right? Hold gold, hold silver, great way to protect yourself from the market. It would appear this is what JP Morgan has recognized very early on, and we could be heading into a period where physical becomes very rare indeed. When the Hunt brothers had a crack 41 years ago, the percentage increase in a year would take today's levels north of $200 an ounce. Doesn't sound that far-fetched, does it? All right, so that's the article from investing.com. Now, as a reminder, I'm not much of a fearmonger here. I'm not one of those prepper stackers. I prefer to just stay prepared. That way I don't have to get prepared by accumulating weekly. And we're talking about silver when it comes to weekly accumulation and some gold each month. Now, I have some questions for you. What do you think about this? What do you think of the fact that JP Morgan holds roughly 675 million physical troy ounces of silver, not to mention the short positions they have in the paper market, which appear to be diminishing? All right, less short contracts out there. That's interesting. I'll have to look into that. So I'd like to hear your thoughts on this. Is a true silver squeeze brewing with the changes regarding Basel III and the massive stockpile of silver that JP Morgan has in its hands? If you've been stacking for some time, you know it seems to be about every single year JP Morgan is caught in some sort of conspiracy with their bullion trading desk, their commodities trading desk, especially when it comes to the silver metal. So curious to know what you think. Hopefully you enjoyed today's video. Happy to discuss your thoughts on this issue down in the comments section. Thanks a lot. Please do hit that thumbs up button if you like today's video, and also consider subscribing if you appreciate market updates, as well as routine unboxings of silver with the occasional dash of gold. Thanks, everybody. Have a great day, and we'll see you soon on another video.